There is one free document sitting on a government website right now that could be quietly costing you tens of thousands of dollars in retirement. Not a tax loophole, not an annuity, not some complicated trust you need a lawyer to set up. It is a single page that shows what the government thinks you earned over your lifetime. And here's the scary part. If even 1 year on that page is wrong or missing, your monthly Social Security check could be smaller for the rest of your life. Today I'm going to show you exactly how to find that document, how to read it, and how to fix it. Stick around to the end, because that is where I will show you the realistic scenario where fixing this raises a check by as much as 40%. Before we go further, if you are within 10 years of retirement, do yourself a favor and subscribe, because this channel exists to protect the money you worked your whole life for. Let me start with why this one document matters so much. Because once you understand it, you will never ignore it again. Here is how Social Security actually calculates your check. They do not look at your last paycheck or your final salary. Instead, they take your entire work history, pick your 35 highest earning years, adjust each of those years for inflation, and average them into a single number called your average indexed monthly earnings. Think of it like a 35-year report card where they only count your best 35 grades, then average them. Now here is the catch that trips up millions of people. If you did not work a full 35 years, they do not just average the years you did work, they fill the empty slots with zeros. So if you worked 30 years, the formula averages your 30 real years plus 5 big fat zeros. Those zeros drag your average down hard. That average then runs through a formula with what are called bend points, which turn your earnings into your actual benefit. The first slice of your average earnings is credited at 90 cents on the dollar, the next slice at 32 cents, and the top slice at just 15 cents. The takeaway is simple. Every real year you can get counted, especially a year that is replacing a zero, can push that average up and put more money in your pocket every single month for life. So where does this one document come in? It is called your Social Security Statement, and you get it through a free account called My Social Security at ssa.gov. Let me be clear about a few things, because people worry. The account is free. It always has been. You never pay to see your own earnings record. Setting it up takes only a few minutes. As of 2025, you sign in using either a login.gov or an ID.me account, and once you are in, you will see estimates of your future retirement, disability, and survivor benefits. But the part I want you to scroll down to is the earnings history. This is a year-by-year list, going all the way back to your very first job, of exactly how much income the government has on record for you. This is the raw material for your entire benefit, and this is exactly where the errors hide. Now you might think, the government surely gets this right. Mostly, yes, but not always, and the scale of misplaced money is staggering. Social Security keeps something called the Earnings Suspense File. This is the holding pen for wages that got reported but could not be matched to anyone's record, usually because a name and a Social Security number did not line up. According to the Social Security Inspector General, that file had piled up about $2.15 trillion in wages and more than 405 million wage items for tax years 1937 through 2022. Let that sink in. Trillions of dollars in earnings sitting in limbo, some of which belong to real workers who will never get credit unless they speak up. In fact, according to the SSA, as much as 10% of Social Security files are erroneous in some way. Whether your number is off is something only you can check, and the only way to check is that one document. So who is most likely to have an error? Listen closely, because you probably fall into at least one of these groups. First, anyone who worked for a small business in the 1980s or 1990s, back when payroll was done by hand. A single typo in a Social Security number and a whole year could vanish. Second, the self-employed, freelancers, and independent contractors. If income was not reported correctly or a client botched the paperwork, that year may be understated or missing entirely. Third, frequent job changers. The more employers you have had, the more chances for a clerical slip. And fourth, and this one is huge, people who changed their last name after a marriage or a divorce and never updated it with Social Security. This disproportionately affects women. If your employer reported wages under your new name while Social Security still had your old name, or the reverse, those earnings may never have been credited to you. Stay with me, because in a minute I will show you exactly how someone in this situation got money back. Now let me show you what an error like this is really worth. For a typical worker who already has a full 35-year record, correcting one or two missing moderate earning years adds somewhere in the range of $50 to $400 a month. In fact, Social Security itself says that if an employer fails to correctly report just 1 year of earnings, your future payments could be about $100 a month less than you are entitled to. That may not sound life-changing, but over a 20 or 25-year retirement, with cost of living raises stacked on top, it adds up to many thousands of dollars. But here is the scenario that justifies that 40% number in the title. Imagine someone who has only about 20 to 22 years of real earnings on their record, so the formula is averaging in 13 or 15 zeros. Now imagine those missing years are found and added back. When you run the actual Social Security formula, replacing all those 0 years with real earnings of around $50,000 can raise the monthly benefit by roughly 32 to 39%, and in the most extreme cases, it approaches 40%. I want to be honest with you because that is what this channel is about. That 40% figure is the best case, not the typical case. It applies to people who are missing many years of earnings, not someone fixing a single year. For most people, the realistic prize is $50 to a few $100s a month. But that is still real money, and it is your money. Let me give you 2 quick illustrations. These are composite examples, the kind of situations Social Security professionals see all the time. Take a woman, call her Linda. She married in her late 20s, took her husband's last name, and never told Social Security. For 3 years, her employer reported her wages under the new name while her record still carried the old one. Those 3 years landed in limbo. When she pulled her statement at 61, she saw 3 years showing 0 income, years she knew she had worked full-time. She dug out 2 old W-2s and a tax return, filed the correction, and got those years restored. Her benefit went up for the rest of her life. Or take Robert, a self-employed contractor. For a couple of years in the 1990s, his self-employment income was understated on his record. Because those were years that would have counted in his top 35, fixing them nudged his average up and added to his monthly check. The lesson in both cases is the same. They only found the error because they looked at the document. So let's say you check your statement and you find a problem. Here is exactly what to do. The form you want is Form SSA 7008, the Request for Correction of Earnings Record. You can download it from ssa.gov. Pick one up at your local office, or call Social Security at 1-800-772-1213. The single most important thing you can bring is proof. The best evidence is a W-2 from the year in question, a tax return, or a pay stub. If you cannot find your old records, do not give up. Social Security can provide copies of your own W-2 information going all the way back to 1978, and there is no charge when it is for fixing your record. Now the timing rule, and this is critical. Ordinarily, you cannot correct your earnings after 3 years, 3 months, and 15 days from the end of the tax year in which the wages were paid. After that window, the record is treated as conclusive. But, and this is the part most people miss, there are big exceptions. You can fix older records to match a tax return you actually filed with the IRS, to correct an employer's omission, to fix obvious errors on the face of the record, or to include wages an employer reported as paid to you that never showed up. So even if the error is decades old, it may still be fixable with the right documentation. As for how long the fix takes, errors may take 10 to 90 days to correct, depending on how complex the case is. So here is your action plan. 1. Go to ssa.gov today and set up your free My Social Security account. 2. Scroll to your earnings history and check every single year against what you remember earning, paying special attention to any year that shows 0 or looks too low. 3. If something is wrong, gather your proof and file Form SSA 7008 before that time window closes. This is one of the highest leverage hours you will ever spend on your retirement. One free document, a few minutes of attention, and potentially thousands of dollars back in your pocket. If this helped you, hit subscribe so you do not miss the next one, and share it with someone you love who is heading toward retirement. They will thank you for it.